Hi there, a very good morning and good afternoon and good evening to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live with this live session as promised around 5 p.m. India time. So, hopefully, you all are doing well, and hopefully, everything is fine with all of you, and your investment and trading journey is going fine. Today, I want to discuss about a very simple point that not many retail investors follow, and they end up losing a lot of money, or not making a lot of money, or either just running away from the market altogether after a few years of investments. So, we'll discuss about that. Plus, we'll answer your queries. So, today, as a Sunday evening, hopefully, more people will join in, and we'll discuss about a lot of points in here. So that's the call. I'll talk about the markets as well. Currently, really precariously poised around 17,100 and may open much lower tomorrow. So we'll discuss about that as well. Shiva, hi. Uh, Hi to all of you. Hi, Ankit. Uh, so I'll discuss about the stocks as well. Pradeep, very high. Good evening. So it has been an afternoon. Rarely I do videos in the evening, but due to some circumstances, I would have to do it in the evening, and that's what I'm doing at the moment. Uh, Hopefully things at your place is much peaceful and better, and you all are doing fine. Uh, so let's talk about the markets for about 3-4 minutes, and then we'll talk about in earnest about that simple strategy that people can follow and easily make money over 18-20 years into the market, rather than getting you can say duped into one particular small cap stock to the other. And there have been a lot of them making the rounds. So about the market, 17,100, 150 is where the market is. We have already broken many, you can say, moving averages, and the last one stays the 50 DMA is around 17,130, 140. I have a feeling that we are in for a decent correction even this week, but there will be pocket of, you can say, pockets of movement on the upside that will that will take the market higher sometimes. So what will happen is I see 16,800 being touched again next week. 17,000 may be coming tomorrow, and then there'll be some support, and eventually 16,800, which we saw this week, or the week that has gone by. We'll see that again. And that's where I'm hoping that a double bottom could be made, 16,750, 800, and then we'll see an up move. But the issue here is what I have been pointing out for the last 1 month or so, and that is inflation. Now, the inflationary pressure and commentary from most of the domestic companies will come in. Yes, there is talk by many YouTubers, many people online, many people offline, that inflation will not affect a lot of companies. I agree with that. But for the overall market, inflation is not that great. And that's why the market may not perform that well. Companies per se will perform. And I'm going to uh, give you an idea of the companies I feel that are going to benefit due to inflation, and that is where you're going to make a lot of money over a period of 10, 20 years, irrespective of what sort of a economic cycle we are going through. And that is where probably sector wise I'm going to help you. Stocks you can pick, in those you'll easily be able to find out. So markets, in my opinion, will continue to be sluggish for the next 3 months, at least 3-4 months. This is April, so till at least August, September, we are going to see this scenario 4 to 5 months, and eventually we could see even 16,100 in this 4 or 5 months period, and 18,000 on the upside. So a 2,000 point, you can say, a range that comes out for the market for the next 5 months. It's going to be extremely volatile, And we have seen that happen, that on the 4th of April we were at 18,100. On the 18th of April we ended up around 16,800 or so, around 18th or 21st of April, 21st, 22nd. So it is extremely volatile, and you have to be either a long term investor of 3 to 4 years investing into very good quality top notch companies and not worrying about the market movement, or you have to be a very astute nimble footed trader, or a short term trader to make money. I believe that intraday traders are not quite making money in this kind of an environment. Let me know what have been your experiences if you are an intraday trader for the last 2 to 3 weeks. Over that period, have you made money or not made money, and what problems you faced? So I have a feeling that it's better to have targets in mind. It's better to have stocks in mind positionally that could perform over 4or 5 months, and just take positions in them, and that's it. And wait for the numbers to come in, and the markets to probably give them higher valuation, and you make money from it, rather than trying to nimble in and out, or be very cute and be in and out over a few day period. Because things are changing extremely quickly intraday. Things are changing very quickly, and we've seen that happen last week when the market fell in the last hour, in the last half an hour or 45 minutes, sharply. So because of this algo trading thing, because of the thing that people do algo trading, and there are a lot of machines involved, you will see those nosedives in the market. We've seen that happen in Dow Jones. We have seen how Dow fell 1,000 points on Friday. We will see that even more going forward. So be extremely careful in this market if you're doing very short term trading or intraday trading. I think positional is the way to go if you want to really invest short term. And long term investing, I'm going to guide you through one of the mantra that probably if you pick those kind of stocks, you'll do very well over a period of, say, 6 to 8 years, 10 years period. Those kind of stocks means stocks which have those qualities. I'll not talk about stocks per se this time around. So that's about the markets. My range is 16,100 to 18,100 over the next 5 months. I don't see new highs happening unless something very, very drastic happens in the Indian economy, and something big happens, because I don't see after IT numbers or some pharma stocks numbers, and some chemical stocks doing well with the numbers. I don't see many companies in the broader markets coming out with very good numbers or guidance going forward. Yes, March numbers could be good, but that would be opportunity to book profits or sell, and take positions off and be in cash. Uh, Rather than build positions in them, because going forward, because of the inflationary pressure that I'm talking about, of the raw material prices, we are going to see a lot of pressure, and a lot of companies coming out with lesser numbers for June and September quarter than probably envisaged. So that's the call. Now coming to my basic point, and that is with regard to how to invest into this market to really make money big money over a period of over a long period of time. uh, Buy into companies which have very good moat. Buy into companies which have very strong moats, and you'll be making a lot of money. I think uh, at this point of time, there are very few, probably 10 to 15 companies of this sort. If you combine all sectors, that will come out with. I'm not going to talk about stocks, but you will know about it. So even if things are expensive, some occasions and some activities for we as Indians, as consumers, are emotional in nature, and they do happen. For example, marriages, they do happen. No matter how expensive things are, we still manage. We borrow in order to get the marriage done. We borrow in order to get the renovation at home done, and so on and so forth, to buy homes, etc. This is not going to stop. Yes, this is going to lessen because of the inflation thing, but it's not going to stop. So you have to find companies which have moat in these segments, which have moat in segments where people are emotionally attached to spend money on. And you look at jewelry companies, you look at paint companies, you look at ancillary housing companies which are related to housing and which are market leaders. Now here is where the you can say catch is. You have to get into companies which have higher moat. By moat I mean which have pricing power, which are a darling of the consumers. I'm not talking of stock market, but consumers, that okay, this is one brand of paint, or this is one brand of jewelry, this is one brand of bulbs, electricity, whatever. I mean, this is one brand of kitchen accessories that I would definitely buy it in this occasion, or this is what needs to be bought in pipes, or in anything electronics. And if that is listed, get into those companies which have higher mode, because if inflation is say 10% or 8% at the moment, or if retail inflation is around 7 8%, then these companies may end up after 1 or 2 years increasing prices by 10 to 12%. And that means when your inflation is 8% and you increase prices by 12%, you're gaining 50% margin on the higher inflationary rates. And that is what these companies do. You look at baby foods, you look at other food products and branded food products and all. You look at branded apparels. There are companies listed. If you can look into the mid caps, and you'll find out. So rather than naming them, you can name some of them right away. But you look at companies which have moved in every segment where there is a need, where there is a need that you will not stop brushing your teeth, where there is a need that you will not stop making your children go to school. So whatever that comes in with respect to sending children at school, and from food to clothing to shoes, etc., you have to look at all aspects. You have to be a novice in investing to make money big, to make big money into the market over a long period of time. You don't have to be very clever or very you can say intricate, or look at numbers, etc., and then make money from the market. So if you look at these aspects, you will end up finding at least 6 7 stocks for yourself that you will be comfortable buying into, and you can buy those even now. I think these companies are at the cusp of making a lot of money over a 10 12 year period. And this is all I'm talking about from a 6 to 10 year period or perspective, not from a 1 year or 6 months perspective. The market may end up being at 16,000 next April. We don't know. There are years, and there have been years, many years, where the markets have given negative returns, where particular sectors have given negative returns. But you have to be, if you have to be a long term investor, this is a strategy you need to follow. And just follow dearly, and just invest as an SIP or regular or in lump sum into these sort of stocks, and then make money over a period of time when these companies end up making money. So that was my call. And now I'm ready to answer your queries for the next 7 8 minutes. You can shoot your queries. Kindly use the super chat and super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Okay. See, Navkar is a very decent company, but at this point of time, I would like you to stay with uh, slightly larger companies which have higher moat, better visibility of earnings going through. See, KPIT, I expect a 55 to 60% bottom line. That's profit growth. That's what I'm expecting. Anything less than 50% market will not like. That's what I feel. Let's see how that turns out to be on Tuesday. Let's see how the numbers turns out to be. Again, a disclaimer, I have the stock in my portfolio. So Priya Life Sciences I have not tracked, so I won't be able to comment. See, both are good. Metropolis and Lalpath. I would prefer buying into Lalpath Labs. I think these are very, very interesting levels to probably get into something like a Lalpath Labs. Okay. DMart. So DMart at 4,000 looks very reasonably priced, but you have to understand that these companies will make big money when economy does slightly better rather than at this point of time. But if you have a 3 to 4 year view, yes, DMart at these levels can be bought, but at the same time, I believe that if you can wait it a while, if you can wait for the market collapse to happen, which could happen. I mean, we could see 16,000, 16,200 in the market. That's the time to really get into a stock like DMart. See, NBCC is a buy above 44. Simple as that. If it goes above 44, you buy. If it doesn't, you don't do anything. If you're holding, hold. 50, 52 will come sometime in the next 6 months, but not quite in favor of buying into, you can say, real estate or anything that is related to higher interest rate, which would be a negative for the company. Relaxo, let's see how the numbers pan out, and only then I can say I still prefer Bata over any other footwear brand at the moment. If you want to really go short term, sorry, if you really want to go on a smaller company, then Mirza International is something to look at. Otherwise, I would say Bata is something that looks good. Uh, Dixon Technology at 4,300. Very difficult to say because Dixon, the management itself has come out and said that the numbers will not be great for the March and the June and the September quarter. I would say wait for July, August, wait for August, September to buy into Dixon. If, Even if we don't see a much of a downside, I don't see a huge upside in the stock because the numbers, I think, are only going to drop over a period of time. So Dixon, in my opinion, is an avoid. Yes, it's a buy below 4,000. I think 37, 3,600. If you get Dixon at those levels, those are the levels to really get in. It is not breaching those levels at the moment. So my opinion is at the moment it's an avoid for me. Okay. See, Nika for 4 years looks good. I think dips to 1750 to 1700, very good levels to buy into. Sigachi from a 7 8 year point of view look good. Even I made the video for that. I think if you can get it around 300 to 330 in that region and hold 4 to 5 years, I think the stock should do well. It's trading at very reasonable valuation. So that's the call. So somebody asked about Birlasoft at around 420. See what is happening now after 2.5 years of bull run in the IT industry is that people are segregating the men from the boys. You can call it like that. So TCS looks better than Infosys. Uh, I So a disclaimer: I might be holding these stocks, a Mastec, and or for that matter, anything that is reasonably priced at the moment. We'll see how KPIT results pan out. If they show 50 60% growth, I think KPIT is also reasonably priced. In case of stocks like Birlasoft, Cient, and other Sexsoft, and there are many other Neogen, etc. In those companies, what I feel is that the businesses are virtually the same. There is no extraordinary thing in those businesses, and they are trading at 30, 40, 35, 25 times earnings. So I don't know whether they'll be re-rated again. And same goes for Birlasoft, although it is very, very attractively priced. If you look at the price, say 6 months back, but at this point of time, I won't say that you get into something like a Birlasoft. Considering the kind of numbers, yes, on a trading thing, you can do that. Maybe 450, 460 may come in with a stop loss of 400. But from a 2 3 year point of view, there are other companies that you can invest into. See, Info Edge looks good around 46, 4700 after the beating it has received. I think you can see 20 25% upside over 1 year. I think HDFC Life and life insurance companies altogether are a buy from a very long term point of view. I think because of the pandemic, they received a lot of, as I said, filings for insurances. So these things will take time. to get over in terms of numbers, and then a performance will come in. I still believe over a 10-year period, life insurance companies are the best to invest into with respect to the returns that you'll end up getting. See, Polycab on declines to 2200 is good. Even KEI on any 15% dip is good. So you can take your pick. Polycab, if you can get it around 2200, 2100, I would prefer that to be buying, but not at these levels. I think Polycab needs to go down another 15% from here to really be a big buy. Tata Power looks set for 330, 340 in the next 18 months to 2 years. I think power sector is seeing some sort of a revival altogether. So hopefully the stock should do well. Again, SBI Cards is a long-term pick. So that's a buy in that regard. Latent view, I would prefer it to be cheaper than where it is. So that's a call there. Thank you. Thanks a lot for being online. Please do like and subscribe my channel. Hit the bell icon so you get my videos straight away when I post. And kindly support me on Patreon. Thanks a lot. And if you cannot pay on Patreon, do email me. There are other ways to pay and get the membership done as well. Thank you.